So recently, inflation data came in hotter than expected. And what does that really mean, right? When you see that headline that inflation came out hotter than expected, month over month, year over year, what does that really mean? So what that means is that the federal government, they measure inflation by, taking the prices of certain things that we eat, like groceries, things that we consume, like automobile purchases and things like that. And what happens is that they calculate these prices, right? And so what they calculated was that prices had started going up in January versus December. So how is this a bad thing or a good thing? So this can be seen as the market's taking it as kind of a bad thing. And the reason they're taking it as a bad thing is because the reason that Jerome Powell and the Federal Reserve have raised rates so much is because prices in the economy have been going up consistently. So what they did was they were raising rates all of 2022, 2023, in order to then slow the economy down and make prices start coming down. You start thinking about things like house prices, how they had gone so far up during the pandemic, how far they went up. And interest rates were low during the pandemic. So everybody and their mother was going out and wanting to buy a house. And some of them, bought houses for some incredible rates. I got a buddy who got his house for like a 2% rate. That was incredible. But it caused the prices to rise. I mean, my house right now is worth like $300,000, and it's not a $300,000 house, guys. But that's what it's worth right now in the market. But anyways, the Federal Reserve raised the rates. They had stopped raising the rates because they saw inflation had started to come down last year. The last few months of last year, prices weren't going up anymore. However, the recent data came out and prices have started coming up, is what the data is showing, right? Then they go back and revise the numbers. But right now it says that inflation is coming up. So what does that mean? It means that the Federal Reserve, they might look to increase rates again in order to make sure that this inflation fire is put out. So they might raise rates to stomp that inflation fire out, guys. They're raising the rates is that blanket that you throw over the fire when it's raging hot. So we're going to keep an eye out for these next few Federal Reserve meetings to see what kind of language they use about whether they're thinking of lowering rates or keeping rates where they're at, because that's what they're doing right now. They're just keeping the rates steady until they see that inflation has come down. But with the newest round of inflation data, they might change the language to where they might give a hint that they might actually raise rates in the future. If they raise rates, that's going to cause the market to go down. Not because the market's in trouble or because, the stocks, the companies are doing bad economically. They're doing great. They're doing record profits. But because all the traders that trade the stocks, they're all going to sell out of their positions because they're going to anticipate that the market's going to start falling, which could happen, right? Raising rates would cause the economy to slow down. It just takes months for that to occur. So we'll keep an eye out and see what happens next. But inflation came in hotter, and we're going to see what happens after that. So stay tuned for the channel. You guys, hit that like, hit that subscribe, so we can stay on top of this and we can get the news out there, guys. Take care.